Hello everybody and welcome back to another episode of the Daily Crypto News. And a lot of you guys said, hey man, keep the giveaways going, so we're going to be doing exactly that. All you have to do to enter the giveaway is press the like button, subscribe, and comment your favorite crypto down below. And if we hit 750 likes within 24 hours, we're giving away 2 times 25 XRP. So knowing all of that, today, pretty big day for crypto. Pretty big day specifically for XRP, as another very interesting statement just came out, and it has to do with the Group of 30. Now, the Group of 30, often abbreviated to G30, is an international body of leading financiers and academics which aims to deepen understanding of economic and financial issues and to examine consequences of decisions made in the public and private sectors related to these issues. Topical areas within the interest of the group include the foreign exchange market, international capital markets, international financial institutions, central banks, and the supervision of financial services and markets, and also macroeconomic issues such as product and labor markets. The group is noted for its advocacy of changes in the global clearing and settlement. So I think you guys already understand a little bit of what this is going to. Look at this right here. G30 digital currency. So yes, this is a very, very interesting report that I at least just got the notice of. I don't know exactly what day it came out. It's somewhere in July of 2020. It could really be just yesterday or so, as people are now flocking to it. And by the way, you can buy this paper for $25, which is an interesting price. But yes, it is 50 or almost 50 pages long, and it is about digital currencies and stable coins, and the Group of 30 has finally done a couple of things about that. So looking here into XRP, we're going to find a couple of really interesting things. Actually, just one, but the theories that we can fetch from this are so interesting that, again, this kind of goes on. First of all, I want to briefly mention right here, for wholesale payments, settlement liquidity is particularly important. For large value payment system that transact in real time, so-called real-time gross settlement system, the associated cash in advance requirements can cause inefficient delays and possible gridlocks in payment. In large value payment systems, where the throughput volume of payments is large relative to cash balances, settlement liquidity emerges as a key source of potential inefficiency. Just think about that for a split second here with why we're so happy with all of Ripple and XRP. A central bank could choose, for example, to provide overdrafts to payment system participants so as to allow high payment volumes with less pre-funded liquidity, which are all options. But again, think about the idea here. Think about the idea. Then, given the nature of the applications, the case for tokenized wholesale CBDCs seems to rest mainly on plumbing considerations, including technology setup costs, operational cyber resilience, speed of settlement, and HQLA drag, meaning the average and peak quantities of central bank deposits, tokenized CBDCs, and other forms of high-quality liquid assets required to process or collateralize a given amount of transactions given a certain type. All right, knowing all of that, they said plumbing here. What do we often say that Ripple and XRP are going to be doing? They're going to be the plumbers within this system. Why? Because, well, as I've just explained here, there's a little bit of bottlenecking. There's maybe not enough liquidity, maybe not enough transparency, or there's just some problems with the interoperability. It could be either or it could be all. It doesn't really matter. What Ripple and XRP in this case are designed to do is, I don't even know how to do that sound, plumb the freaking system to make sure it runs smoothly, and so that all your feces and whatnot can just flush through the toilet. That's just, yeah, a little bit of a joke. But yeah, the CBDC token technology itself does not mitigate settlement liquidity requirements, and the adoption of a tokenized CBDC technology does not eliminate and could even exacerbate the need for central bank provision of daylight overdrafts. Well, only the third part about that is really interesting to me. This part where they say the CBDC token technology itself does not mitigate settlement liquidity. So we need to mitigate settlement liquidity, right? Well, I guess to a certain degree, yes, right? That kind of sounds pretty reasonable. Kind of sounds very reasonable if you ask me. And what currency does that the best as well, right? Wait, by the way, does not mitigate settlement liquidity. Well, actually, no. Wait. I was like, wait, we do not need to mitigate settlement liquidity. We need to mitigate settlement liquidity requirements. I'm sorry, guys, I just missed that for a little second. We do not need to mitigate settlement liquidity. We need to increase settlement liquidity, and we need to mitigate these requirements, or just, I guess, make them less high. I guess to a certain degree, that's also not even needed. The point that I'm trying to make here, without all this extra stupid talk, because I messed up the word mitigate, because it's English, and sometimes I mess up in the brain, because English is not my first language. What I meant to say here is what they're saying and what they're hinting towards in this whole section here, talking about RTGSs and CBDCs, is that the CBDCs are really kind of cool, right? They really have a good purpose. They really have a good idea. However, a little part of the technology and a little part of the requirements and a little part of what they want cannot be done only with CBDCs. And very often people say, well, why would XRP be needed if we got CBDCs? Why would XRP be needed if we got stablecoins? Stablecoins, they work, all right? They can work as online fiat, digital currencies online, real fiat online as stablecoins that are pegged to, for example, the US dollar. However, there's a couple of things which really don't work, and one of the most prominent and obvious and important ones is that parties don't trust each other, all right? So if you're going to create a, for example, stablecoin US dollar, that's going to be completely cool if you want to exchange it over in the US. However, if you want to, for example, still exchange to another country, you're still going to have to work with that other stablecoin and so forth and so on. Basically, the problem here is that all parties don't trust each other and you're never going to get a unified asset. You're always going to have the problems and the friction of still needing multiple sorts of assets in different places if you want to access them really, really quickly, or a very good system for exchanging all these currencies. But another point there is that even though CBDCs might come in, at first they're going to go in very, very slowly, very, very friction-free, and also, as they just said here, it's not itself going to be mitigating settlement liquidity requirements. And at the start, it might not even be that good. It might not even be that good. It might not even solve that many problems because it's basically all we have right now, but then just online, potentially. But if they were to build it on top of Ripple's system or work with them as the provider here, it could work a lot better. Now, one thing they are saying, though, which is negative, is that another part that's bad about it is the costs. And I actually have no idea how much Ripple's services would cost a company or how that all works out, what their profit model or their business model is in that regard. Like, is Ripple that expensive to work with? Does it cost, like, for example, 0.01%? Or how does that work? If any of you guys know, let me know in the comments down below, because that might change your opinions about, how many companies should switch over. But since they said they want to work with ODL for these SMEs, it couldn't be too expensive. It couldn't be a steady amount either. It should be a percentage, but maybe it's even free for ODL, that they even pay you to use it. I don't really know. Maybe just RippleNet itself costs a license money amount. I don't know. All right, so this part actually involves XRP, though, because this was just theorizing just now. Let's dive a little bit deeper. Coordinating the introduction of global office sector or official sector stablecoins. Carney 2019 has raised the question of whether a global coordinated system hegemonic currency could dampen the spillover shocks associated with the dominance of the US dollar as a reserve currency. By the way, I think the US dollar as a reserve currency is going to end pretty soon here, within 10 years. Reason for that being, I think that the median and even mean, in this both cases, I guess they're the same, years for a really reserve currency is about 95 or 85. I think it's like 95 years or so, or 85. You guys look it up for a quick second. And right now we're already really, really close to that number. Basically saying and thinking we're going to change over really soon. And I'm really wondering what it's going to be, right? What's the next currency going to be? Is it going to be the Chinese yuan? Is it going to be RMB? Because China is really emerging, and very often the currency is really the country, or at least the currency that's most prosperous at that point, which is going the hardest and being the most useful in all that regard, and I guess the most stable as well. It's going to be the China next one. What do you think? All right. A systemic hegemonic currency could, for example, be a stablecoin backed by a basket of deposits at different central banks. All right. That's actually another thing I want to get into, but not today. It's a very, very hard explanation about how I see the banking system and how I see stablecoins working if they're pegged to deposits at different central banks. It's a whole different theory for a whole different day. It is possible that such a stablecoin could be valuable for cross-border payments, serving a functional similar to that offered in the private sector by Ripple, a real-time gross settlement system, currency exchange, and remittance network whose digital currency XRP leapfrogs slow and expensive correspondent banking. If such a model, or actually a global currency, were to be heavily used, however, it could lead to monetary policy spillover costs, Mondon 1961, a very important economist, and efficiency losses associated with competing payment network externalities, and payment settlement chains could be lengthened to the extent that the systemic hegemonic currency would need to be supplied elastically. Central banks could face significant coordination costs given the different respective monetary conditions, given the challenges the euro has faced, and the difficulty of having transnational money without a transnational fiscal and regulatory authority. It is difficult at this point to see how a global currency could evolve digitally when it has not yet happened with the existing system. So to kind of summarize that part about it all, and the last part they say it's not going to be impossible, but right now it's kind of far away and kind of strange. To summarize the system and what they've said here is that right now for XRP, right, it doesn't really have one connection to a certain country or to a certain currency or anything like that. So basically, we're using a transnational system, which would most likely be very difficult because different parties are going to either have to trust each other or trust really a lot in the system. Now, are people going to be really trusting in the system? I guess not yet, because that's kind of a friction point at this point. So they're going to be having to trust each other, which is something that is possible in theory, but not yet practiced too much. And I'm going to actually put an emphasis on here that the US working with countries is a lot different than, for example, the countries in Europe uniting. And one thing actually that you should consider is how come that the EU was formed, right? How was that all done, and what were the reasons? What is all of that? You got to look it up for yourself because you got to know this type of stuff. Now, if you start to relate it to the EU forming, what happened in the EU? A lot of these countries had their different currencies, and all of a sudden they decided, you know what, let's go for one central currency to make everything cheaper, less frictionful, and just make it so our economy and all economies would work better. However, it was kind of experimental. However, the EU was not formed in one day. There was a long process of smaller unions and all of that. In the US, though, I don't think these connections are made very often in that regard. And I don't really think the US is trying to budge down for another currency anytime soon, where they're like, you know what, let's get rid of the US dollar and let's go for something else that we can, I guess, unitedly agree upon, which is a very frictionful part, as, again, I don't think China would do that either. And I think a lot of other parties won't really be into it because they're behemoths. You know, and with, I guess, a lot of these South American countries, for example, it could be a lot easier because they're really small, really close to each other, and their economies could really prosper from working with one currency. But for a lot of these countries out there right now that are so big, like the US, China, and, like, for example, maybe Russia or things like that, maybe going to a different unit of currency that's unified wouldn't really work out for them because they don't trust each other, they don't like each other, maybe, possibly. Again, don't quote me on that one. But it's a system that's not really been tried before to this extent. And then even moving it digitally when it's never been, I guess, done, again, excluding the Europe here, done on a smaller scale, it's going to be really, really strange and most likely a little bit further away. That's just a theory I'm thinking about here. However, again, it's all positive for Ripple. Because why? Well, the thought is with all of this that, for example, XRP could change this whole system and just plumb the whole freaking thing. At least that's what I'm fetching from all of this, that what XRP really does and what they do over at Ripple is literally a lot of the friction that they have, it can fix it. However, the only thing I'm worried about is how expensive it will be and how trustworthy they kind of view each other, these parties. I'm thinking about that. All right, here was a little bit of a summary of the article. The Group of 30 has recognized XRP cryptocurrency as a solution to slow and expensive correspondent banking in its most recent report that focuses on various risks and opportunities associated with all types of digital currencies. While hypothesizing about the introduction of a global official sector stablecoin, G30 suggested that it could perform a similar function to Ripple's existing remittance network. It is possible that such a stablecoin could be valuable for cross-border payments, serving a yada yada yada. And then MAS chairman recognizes crypto's potential. We saw that a little bit earlier. At least I saw it. I don't know if I shared it already. Back in 2011, former European Central Bank President Jean-Claude Trichet became the forum's chairman, and it is currently spearheaded by Singaporean politician and economist Tharman, who was appointed as the chairman of the Monetary Authority of Singapore. And he claims in the report that if implemented properly, digital currencies could speed up the cross-border payments and cut down their costs while ensuring financial inclusion and uprooting crime. To quote, the G30 sets out the key considerations for policymakers in determining how digital currencies should be designed and implemented so as to achieve their potential to bring about cheaper and faster cross-border payments, financial inclusion, and help root out illicit finance. Really, really interesting, guys. Looking a little bit earlier though, I actually noticed, quite a little while ago, in 2017 actually, Ripple comments on the OCC paper. And what was said in this OCC paper, actually let's take a look. Ripple recently submitted a comment letter in response to a paper by the OCC, the Office of the Controller, on exploring special purpose national bank charters for fintech companies. Now yesterday I explained to y'all how Brad Garlinghouse knew a lot more about what's going to be happening in banks than we did. And I think this has a very, very big part in all of that. In 2016, December, they announced a couple of things, right? The OCC. And mostly they were saying that they're going to get into it. They're going to look into fintech and banks and their connections and all of that. But basically, Ripple put up a letter here explaining what Ripple does and really what there is to explore, what they need to know. And maybe it was because of that. Maybe they got a response that I didn't know about. Maybe they got some thoughts, which is why Brad Garlinghouse knew and actually quoted, even really said out publicly, that in 2020, a lot of these banks were going to be hopping on. Maybe he knew something that we did not because of this paper. And maybe it's a detail we missed. Maybe it's something we looked over. Could really well be so. 10 hours ago, it came out, lawsuit. Investors can't prove Ripple knew XRP had no liquidity. I'm going to get into that a little bit later today, as I have a couple of things I want to say about that. But another one here. Crypto safekeeping just came out once more. Likely to drive bank fintech partnerships. That has to do with what I just showed you guys. I'm really, really wondering what Ripple knew all the way back here. I mean, they knew the OCC was trying to explore crypto. They knew that fintech and their connections were all there. But I'm wondering really what happened in this conversation. And also how Brad Garlinghouse could know all this stuff. Maybe they gave a response that they didn't make publicly or something like that. I really don't know, but I'm really trying to explore that. I'm going to be looking a little bit further into that all as well, as these custodial services are getting more and more important and more, I guess, prominent in the space. Let's see, custody. No, it's not in there. Custodial, also not. Actually, to read here, in the paper, the OCC explores its chartering process and supervisory standards for special purpose national banks in light of advances in fintech and evolving customer needs. Now, of course, for banks, national banks, customer needs is transparency and literally everything that Ripple does. Advances in fintech is really what Ripple is, so a lot of this really applies to our situation. I'm looking here if there's articles that I really want to cover in this video still, or if I'm going to go and put it in the other one. Just quickly check in. No, I think we got the most important announcements for right now. I definitely got a couple of other videos coming up later today, but again, we got to do it subject per subject, as otherwise I'm going to be having like 40-minute videos each time, diving into things and thinking about things while I do them. So I want to keep it short and robust, if that's the right word, to think about my thoughts really, really clearly before I put it out. And yeah, so I'm going to be thinking about a couple new things. I have another theory set up, which I'm going to explore a little bit deeper before showing it to you guys. And again, if you're enjoying this type of stuff, let me know. Should I just go reading the news instead of all this deeper diving and thinking and theorizing? Let me know in the comments section down below what you think. See you guys again in another crypto video. Ripple is going to be huge.